generally what happens when disruption kicks in is markets collapse. Now, it can either be rapid and complete in the case of newspapers and music and a few others, or it can be kind of slow and incomplete, which is how a lot of retailers have experienced it. I think we think it's probably going to be a little more like the latter, more like slow and incomplete deflation of financial services as competitors come in and compete away some of the high margin, high revenue categories.
The other main change that will happen within the next 5 years is all the little players will get knocked out, and we'll end up with those fintech entities that provide quality customer experience within the mobile or online sphere. So that, because I think that, going back to what I said before, the ones who are going to be successful are those who are marrying the perfect customer tailored online experience with the excellent technology that achieves the customer's purpose. And I think within those 5 years, we're going to see who those players are. Are they going to be incumbent financial services? Will they be new startups? Could it in fact be the technology companies moving into the space? There's a lot of players who are afraid that if the technology companies get serious in this space, lots of customers are going to move to them because they already trust their relationship with Apple, with Amazon. It's a good experience that they keep coming back for. So what if those players get really strong in fin services?
Banking service or existing financial services will be unbundled, I think, because now many fintech company is focusing on the very specific service in financial industry, and actually it's better than existing one. So I think the bank or existing financial institutions cannot maintain the current business itself.
I think you'll see a much more integration in the markets between big technology companies and financial companies.
The iPhone is about 8 years old, I think. I think the first one was in the middle of 2007, 2008. And we've come a long way since then. Fingerprint technology on iPhones. I read about eyeball scanning and facial recognition and voice recognition to log into financial apps and for security and privacy and that kind of thing. So the sky's the limit when it comes to the technology.
It's a bit hard to see what type of product could come out of it, but what I do know is that the products will have these features: faster, cheaper, more efficient, more transparent.
Financial services will also become something that's seamlessly embedded into what we're doing on a day-to-day basis. So to some extent it'll be less something that we think about, now I need to go and get my mortgage. It'll be I buy the house and the mortgage is automatically there. Or I go and want to use a car. I may not even own a car. And I won't think about the payment, just like I don't really think about the payment in Uber today. That sort of experience, I think, will start to translate into a whole lot of areas of our lives.
Yeah, it wasn't that long ago that phone banking was new. You ring up and punch in the numbers and transfer your money. And then that dies and internet banking comes along, and everybody internet banks. That's the new greatest thing. Well, now 60 cents in every dollar is transacted on a phone or tablet. So even internet banking is starting to die. So we're seeing this progression, and like checks, I think credit cards will disappear very, very quickly. I actually think credit cards will disappear faster than checks. And everything will move to phones and tablets. And X and Y, that's the only way they want to transact. They don't want to sit down in front of a screen and do it. They need their money now, they want to transact now. Yes, again, we see the internet banking now is generally only done between 7 p.m. and 10 p.m. at night, hardly at all during the day. So we're seeing very much this move away from even the internet to phones.
So I think the main change in the next 5 years will be an increased use of mobile phone technology. So it wouldn't surprise me if in 5 years' time you don't have a wallet at all and instead everything is on your mobile phone. Nor will you have a bank branch, because you don't really need a bank branch, it'll all be again on your mobile phone. The other change that will occur within the next 5 years will be in the back office systems of banks, which the customer's not really going to experience, other than that it should be cheaper to get their services and quicker and more efficient.
Artificial intelligence will come into play in the way banks make investment decisions and how they advise their clients. It's a more efficient way of providing the advice. It will reduce the cost of service for their customers, and it should help the banks with their profitability as well. The questions at the moment are, how is that going to be regulated? We don't know yet what the regulatory position will look like. I think regulators around the world are really struggling to figure out what are the issues with robo-advice with artificial intelligence. Banks are struggling to understand what are the legal risks, what are the operational risks. So this is all very much in a phase of evolution at the moment. We don't know quite where it will all end up, but both on the bank side and on the regulatory side, there's a sort of struggle to understand and make sure these issues are properly addressed.
If you see how fast technology has developed and moved, and whether the law that we know today, the schemes, the regulatory regime that we know today will be able to keep pace and grow with how fast the business and technology has moved. I think that's really a very big challenge.
I think the limitation of the development of the laws in this area is somewhat understandable, because normally the regulations or the regulators maybe should not be, ahead of the markets in these areas, but they should follow closely to the market and see how the fintech products or markets can result, and then regulate it effectively, efficiently, to limit the impact of the fintech products to the stability of the financial markets, and also to consider how these new products and services must comply with the customer protection principles.
The Hong Kong government have initiatives on the fintech space. They have established a steering group on fintech, and the Hong Kong government just said in the budget that they are going to be committed to all the recommendations that the steering committee proposed. So we are looking forward to Hong Kong to be built as a fintech hub.
Look, I don't think the law is a hindrance to business in the sense of a lot of these new developments, because often it isn't in the way, it just hasn't worked out what it needs to regulate yet. So I think there's a lot of work to be done, but I think the technology will drive ahead and present the issues to us, rather than, in most cases anyway, the law stopping the technology in its tracks and us needing to facilitate the growth of the technology.
We see an increasing desire for ventures to globalise, to scale out of Australia and look for opportunities in other markets. And at the same time, we're also seeing the regulators starting to try and broker these reciprocal deals with other regulators in other markets. So I think we're increasingly going to see financial services start to become a more global experience.
Financial services regulation has tended to be quite conservative. It's tended to be framed based on large organisations with very large market share. We're starting to see regulators in different jurisdictions vying for the title of most fintech-friendly regulator. So we're starting to see Singapore, for example, London, the UK, starting to put in place regulation that is designed to attract some of these businesses to set up in their jurisdictions. And we're starting to see Australia do the same thing. That will, for at least a while, I think, that will drive some level of easing of the regulation, of the regulatory regime, to allow some of these products to at least get a foothold and get started.